Hello, everyone. My name is Zulfiqar and welcome to Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for our special report that get delivered to your inbox directly. There wasn't really much to talk about crude oil when we entered 2023, with fears of recession putting pressure on oil prices. In April, West Texas Intermediate hit a low of $63 and change. Fast forward to today, and record demand, fears of recession going away, and production cuts from OPEC. Oil market looks completely different. Oil bulls are calling for $100 per barrel oil price this year alone. In some parts of the world, oil prices are already up over $100 per barrel. And that suits today's income pick. Kinetic Holdings Inc. traded on New York Stock Exchange under symbol KNTK just fine. John?
Yeah, thanks, Mo. Kinetic Holdings Inc. is a midstream company with operations in the Texas-Delaware Basin. Most people aren't actually familiar with Kinetic Holdings, but that's only because it changed its name and began trading under a new ticker symbol back in February 2022. Kinetic Holdings was actually born out of the merger of BCP Raptor, a holdings company for pipeline assets in the Permian Basin, with Altus Midstream Company, a pure-play Permian to Gulf Coast midstream company. Now, the merger created Delaware Basin's largest publicly traded, fully integrated midstream company, supported by stable sources of earnings and cash flow. The new company is now the second largest natural gas processor in the entire Permian Basin, and the largest in the Delaware Basin, with approximately 2 billion cubic feet per day of processing capacity. It has over 90,000 barrels of crude storage capacity, manages over 500,000 barrels per day of water injection capacity, and it serves nearly 850,000 dedicated areas. Approximately 30 producers rely on Kinetic for its midstream services. That includes some pretty big energy giants: Exxon, Chevron, ConocoPhillips, and Diamondback Energy. The diversified customer base helps it provide with reliable cash flow. Approximately 90% of EBITDA comes from natural gas midstream services, while approximately 95% of 2023 gross profits is expected to come from fee-based agreements and hedges. This also comes in with built-in fee escalators, which help protect it against inflation. The average contract life is around 10 years with no near-term expirations.
Now let's talk about numbers. How did this company do in the second quarter of 2023?
It reported strong first quarter results, with that momentum carrying into the second quarter, where it generated $71.7 million in net income and adjusted EBITDA of $207.9 million. It also reported distributable cash flow of $144 million. The solid results were primarily fueled by increased volumes across both the midstream logistics and pipeline transportation segments. Now, looking ahead, the company said it's tracking towards the high end of its 2023 adjusted EBITDA guidance range and the top end of its capital expenditures range. On top of that, the free cash flow outlook for 2024 remains robust as well, with significant year-over-year adjusted EBITDA growth. And that's coupled with less than $150 million of expected capital expenditures.
And now let me ask this, is its high-yield dividend is well covered here?
Yeah. I don't think investors have anything to worry about when it comes to its high-yield dividend and its quarterly payout. In fact, its reliable cash flow helps Kinetic provide investors with a reliable dividend. It declared a second quarter dividend of 75 cents per share, or $3 on an annual basis, for a current yield of 8.86%. Again, the payout is safe. The second quarter dividend coverage is 1.3 times. That means it could pay its second quarter dividend using its net income 1.3 times. The higher the ratio, the better. A higher ratio shows it could pay a similar or higher dividend. A low dividend ratio, especially one below a 1.0, suggests the dividend is not safe.
And how is KNTK stock doing?
Well, Kinetic Stock holding faced industry pressure in the opening months of the year, but it's taken off since late spring. Like, as of this recording, Kinetic Holdings stock is up around a little more than 4% over the last 3 months, close to 20% over the last 6 months. And it's also up 4.5% year over year. Now, again, those are solid gains no matter how you look at it, but even conservative Wall Street sees sunnier days ahead for Kinetic Stock, with analysts providing a 12-month share price target of $38.86 to $43 per share.
All right, John, thank you so much for your analysis. Just to recap, Kinetic Holdings Inc. is a pure-play Permian midstream company with a growing footprint and ownership in 4 major Permian to Gulf Coast pipelines. Its diversified customer base provides stable earnings and cash flow, with 95% of expected 2023 gross profit to come from fee-based agreements, all of which help support its growing high-yield dividend. The future certainly looks bright for Kinetic and Dividend Hogs as it expands its system's footprint, grows its volume base, and reports continued commercial success. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.